Hello everyone, welcome back to Stock Market Meridian. Today is 12th August 2026 and you're watching today's pre-market report. Starting with the US markets, all the major US indices closed in the red zone. However, at present, US index futures are trading in the positive zone. So despite yesterday's weakness in the US markets, the current futures trend is showing some recovery. Now, coming to the European markets, only the FTSE 100 index closed in the negative zone, while the remaining two major indices closed in the green zone. And looking at the Asian markets, Japan, China and South Korean markets are currently trading in a neutral to positive zone. So overall, global markets are indicating a somewhat neutral to positive sentiment for today's session. But the key question is, will this positive global setup translate into a strong opening for the Indian markets? We'll know that shortly. Now let's move to the commodities. Starting with crude oil, US WTI crude oil is currently trading around $82 to $84 per barrel. Meanwhile, Brent crude oil is trading near $91 to $93 per barrel. So crude oil prices continue to remain elevated, especially with Brent still trading above the $90 mark. Yesterday, Indian crude oil futures ended with around 1.7% gains. On the other hand, natural gas futures declined by nearly 0.4%. Now, moving to the precious metals segment, Indian gold futures closed with nearly 0.4% gains. However, international gold futures are currently trading in the negative zone. Coming to silver, Indian silver futures ended with around 0.5% downside, while international silver futures are currently trading in the neutral zone. So overall, the commodity market remains mixed, with crude oil continuing to stay at elevated levels while precious metals are showing mixed momentum. And this is something Indian market participants will need to keep an eye on, especially because higher crude oil prices can remain a risk factor for the Indian markets. Now, let's check ADR data. Yesterday, on the negative side, Wipro, ICICI Bank and HDFC Bank ADRs closed weak. On the other hand, Reliance Industries, Infosys and Dr. Reddy's Laboratories ADRs closed with strong momentum. So overall, ADR signals are mixed, with strength visible in a few major names, while some banking and IT stocks remained under pressure. Now, moving to the FII and DII data. Yesterday, institutional activity was very low. FIIs were net buyers of just 258 crore rupees, while DIIs were net buyers of only 24 crore rupees. So when we look at the overall institutional activity, there was no major buying or selling pressure from either side. We can therefore consider this as a completely neutral zone. But the bigger question is, will institutional activity increase once today's major economic data starts coming in? We'll have to watch that closely. Now, let's check the economic calendar. Yesterday, the Reserve Bank of Australia's interest rate decision came in line with market expectations, with the rate decision remaining unchanged. And in the United States, existing home sales for July came in below the previous level, although the number was slightly better than market expectations. Now, coming to today, we have inflation data coming from Germany, India and the United States. And along with that, the US crude oil inventories data will also be released. These numbers could be important for both global markets and commodity prices. And looking ahead to tomorrow, we have UK GDP data, US PMI data and US initial jobless claims data. So the next couple of sessions could remain important from a macroeconomic perspective. Now let's move to the geopolitical developments. And interestingly, there appears to be some progress on the diplomatic front in the Middle East. Mediators have confirmed significant progress in regional diplomatic talks. Qatar's foreign ministry spokesperson said that diplomatic negotiations between Oman and Iran have reached an advanced and pivotal stage. Iranian Foreign Ministry spokesman Ismail Bagahi also confirmed that the talks being mediated through Oman are progressing smoothly, despite attempts by external factions to obstruct an agreement. Adding to this development, Pakistan's Interior Minister arrived in Tehran for talks, while Pakistani officials indicated that US-Iran negotiations could be close to some arrangement. The overall diplomatic environment appears to be moving more toward a potential peaceful resolution. However, there is still a major point of disagreement. US President Donald Trump reiterated that the United States will seek financial compensation from Iran for combat losses and past regional conflicts, following Tehran's demand for reimbursement related to war damages. So, while diplomatic talks appear to be progressing, the final agreement still has several major hurdles to cross. Beyond the Oman-Iran talks, there were also developments involving Lebanon, Israel, and Yemen. The US State Department confirmed that formal talks between Lebanon and Israel are scheduled to to resume in Rome next month, despite recent artillery shelling and controlled detonations along the southern Lebanon border. Meanwhile, Yemen's president condemned recent Houthi strikes, declaring that the phase of aggression without consequences has come to an end. And moving away from the Middle East, Ukrainian President Volodymyr Zelensky confirmed that Ukraine has officially handed over peace proposals to US negotiators. The proposals are aimed at outlining a possible framework to end the ongoing war between Ukraine and Russia. So overall, the geopolitical picture continues to remain important, but the key development to watch is whether these diplomatic efforts can actually translate into concrete agreements. Now, let's move to the important company updates announced after yesterday's market close. And there are quite a few developments to track today. First, let's talk about State Bank of India. SBI announced the successful pricing and conclusion of its latest offshore bond issuance. The bank successfully raised $500 million, which is approximately 4,150 crore rupees, through senior unsecured fixed rate notes. These Regulation S bonds have a 5-year maturity and carry a fixed annual coupon of 5.25%, payable semi-annually. The notes are being issued through SBI's London branch. The bonds will also be listed across multiple international and offshore platforms, including the Singapore Stock Exchange, India INX, and NSE IX at Gift City, Gujarat. This successful issuance highlights SBI's strong access to international capital markets, and it also provides the bank with additional long-term foreign currency capital to support its credit growth and international operations. Next, we have Hindalco Industries. During the company's post-earnings conference call, Managing Director Satish Pai announced an important change related to the Aditya Birla brand. Hindalco will now start paying a brand royalty to Birla Group Holdings. The royalty has been fixed at 0.25% of revenue, with a maximum cap of 225 crore rupees per year. Management clarified that this royalty payment will not impact Hindalco's capital allocation plans or dividend policy. But that's not the only important update. Hindalco currently has around 470 megawatt of solar, wind and hydro capacity, along with 35 megawatt of pumped storage. The company plans to add another 414 megawatt of solar and wind capacity, along with 90 megawatt of pumped storage during this financial year. That would take its renewable portfolio to around 884 megawatts by the end of FY27. On the aluminium side, downstream volumes are expected to recover during the September quarter after a softer Q1. Downstream EBITDA had reached a multi-quarter high of around $300 per ton in Q1. Management expects it to stabilize near $250 per ton in the near term before potentially moving above $300 per ton as the Aditya FRP plant ramps up. So, Hindalco has several operational developments that investors will be watching closely. Now, this next update is particularly important for the quick commerce sector. The Karnataka Food Safety and Drug Administration Department conducted a special inspection drive targeting quick commerce storage hubs. During the inspection, officials sealed a major Zepto warehouse operated by logistics company Nippon Express in Hoskote, Bengaluru Rural. Authorities reported issues involving unhygienic food handling and storage, non-compliant labeling, misbranding, and violations of FSSAI regulations. An official notice was issued and authorities recommended filing a case before the adjudicating officer. Zepto stated that it fully cooperated with the inspection and is taking corrective measures. But there was another major development. In Maharashtra, the FDA suspended the food license of a Blinkit dark store in Malad, West Mumbai. Officials reported serious issues, including cockroach infestation, expired and damaged packaged food, improper storage conditions, and inadequate pest control measures. Food was reportedly found on rusted racks and directly on floors, while authorities also noted missing staff health records and inadequate protective equipment. Under the suspension order, the dark store is prohibited from selling or distributing food products until further regulatory directions. So as of now, this is a negative development for Eternal, and investors should also keep an eye on whether any further regulatory action emerges across the quick commerce industry. Because if more such inspections or regulatory actions happen, other listed companies in this space could also come under pressure. Next, we have an important clarification from SAIL. In its response submitted to the stock exchanges on August 10, SAIL addressed reports claiming that the company was planning a 5% FPO to raise capital. The company confirmed that it is actively exploring different options to raise funds for its ongoing capital expenditure requirements. An FPO or QIP is one of the options currently being evaluated. However, SAIL clearly stated that discussions are still at a preliminary stage. There is currently no final corporate decision regarding an FPO or QIP. So, investors should not treat the reported 5% FPO as a confirmed development at this stage. Now, coming to an interesting technology-related update. KFinTech has introduced a new AI architecture called Clarity, aimed at addressing two major problems in legacy financial verification systems. The first is undetected skilled forgeries, and the second is the false rejection of genuine signatures. Clarity uses microstroke dynamics to analyze factors such as stroke stress, pen pressure variation, curvature velocity, and baseline tremors. The technology integrates with KFin Shield, KFinTech's fraud detection platform. This strengthens security across areas such as mutual funds, demat accounts, and registrar and issuer services. It can also be used for high-value operations such as off-market share transfers, DIS processing, securities transmission, and bank mandate modifications. According to the company, the system maintains an accuracy threshold of less than 0.01% for high-value financial transactions. It can also provide up to 3x faster verification turnaround and automate as much as 90% of verification workflows. So, this could be an interesting development to watch from the perspective of AI-driven financial security and automation. Now, let's move to the company's orders section. First, Diamond Power Infrastructure secured 2 purchase orders from EPC contractor Rajesh Power Services Limited. The total value of the orders is around 195.48 crore rupees. The first order under the disaster management scheme is worth approximately 98.21 crore rupees and involves the supply of around 645 kilometers of 11 kV cables. The second order under the urban underground program is worth around 97.27 crore rupees and involves approximately 725 kilometers of 11 kV cables. In total, the company will manufacture and supply nearly 1,370 kilometers of 11 kV medium voltage underground cables from its Vadodara facility. These projects are aimed at converting overhead power lines into underground networks across cyclone-prone coastal districts of Gujarat. The objective is to improve the resilience of the power grid against extreme weather conditions. The delivery period is 12 months, with execution taking place through lot-wise manufacturing clearances. Next, BEML announced a new order worth more than 184 crore rupees from Hindustan Aeronautics Limited. The contract involves the manufacture and supply of light combat helicopter fuselage aerostructures. BEML stated that the order falls within its ordinary course of business. This order further strengthens BEML's presence in the defense and aerospace manufacturing sector alongside its existing mining, railway, and metro businesses. Now, let's move to the quarterly results announced after yesterday's market close. And I'll keep this section simple and focus on the key numbers and the overall result quality. First, PI Industries. On a quarterly basis, revenue, EBITDA, and net profit improved. However, on a yearly basis, these parameters declined. Margins also showed some weakness. So overall, PI Industries posted a weak set of results. Next, we have NBCC. EBITDA and net profit improved on a yearly basis, while revenue declined. The positive point is that margins improved both year-on-year and quarter-on-quarter. So overall, NBCC delivered a good set of results. Next, Ashoka Buildcon. Here, EBITDA and EBITDA margins improved. However, revenue and net profit declined. So despite the improvement in margins, the overall results were weak. And finally, we have Bata India. Bata posted a strong set of results. The most noticeable number here is net profit, which improved by nearly 2,800% on a quarterly basis. But there is an important reason behind this massive percentage growth. In the previous quarter, the company had reported only around 2 crore rupees of net profit. So the extremely high percentage growth should be viewed in that context. Apart from that, other key earnings parameters also showed strong improvement. So overall, Bata India delivered a good set of quarterly results. And that's all for today's pre-market report. Today's session could be interesting, especially with India, Germany, and US CPI inflation data, along with US crude oil inventories coming up. At the same time, we'll be watching the impact of the latest geopolitical developments, quick commerce regulatory actions, company orders, and quarterly results. Now, I want to know from you, which company are you tracking the most from today's updates? And also tell me in the comments which company's results should I cover in detail in today's post-market report. If you found this video helpful, don't forget to like, share, and subscribe to Stock Market Meridian. And I'll see you again this evening with today's post-market report. Thank you for watching. Signing off, Jai Hind.